We're back with our wonderful guest, Jon Spurr of Inspired Life Mortgage, talking about interest rates, mortgages, and also financing for home buyers who are looking to get into the market. Did you explain how mortgage rates work for interest rates? Did you already explain that to us before?
We talked about the Fed and them changing rates. But I think the misconception is that people believe that the rate the Fed controls immediately changes mortgage rates.
Yes, I understand.
And that just is not the case. It's the rate the Fed controls, and it sounds really weird, is the rate that banks loan each other money overnight. Now, that trickles into everything else because we know banks don't give away anything for free.
Right.
So that starts getting into short-term interest rates. It starts changing the 10-year Treasury. The 10-year Treasury will have a direct effect on the 30-year mortgage bond, and it's a trickle-down effect. But the other thing I don't think people understand is in the investment world, a mortgage-backed security is traded like a commodity.
Right.
They're banking on what rates are going to be in the future because we're doing the loan today, and it's not going to make it to the mortgage-backed securities market, and a bundle will be sold for 90 days. So they're constantly projecting what rates are going to be, and they're trading it like a commodity. And so it's significantly more complicated than anybody knows. I mean, I don't even know all the ins and outs. I know enough to be dangerous, and I know enough to know that when rates are going to go up or go down.
You know enough to sound really smart and get my head spinning just a little bit every once in a while.
Oh, but again, I try really hard not to focus on rate in a good rate environment or a higher rate environment. And let's keep in mind that interest rates are still lower than the 40-year average of mortgage rates.
Mm-hmm.
So this is not the sky falling doomsday scenario that the news media would like everybody to believe. I just don't like focusing on the rate because it's not the most important part of the transaction.
Well, without focusing on the rate, but still hanging around that topic, if you had a buyer that called you today and got pre-qualified today, what advice are you going to give them as far as locking in their rate? At what point would you have that conversation?
We have 2 new lenders that we work with. And again, I want to just say this real quick. I'm a mortgage broker, which means I have access basically to every mortgage lender in the country. I have 29 that I work with right now, but I have access to everybody. We picked up 2 new lenders that let us do what's called lock and shop. And so we can actually lock your rate in before you have a property address. And you have up to 120 days to find a property and close. And the other part that I really love about this new product is, let's say you find a house and within 15, 20 days, the inspections come back and all of a sudden sewer line's bad, roof's bad, and you don't want to buy it.
Mm-hmm.
Well, we don't lose that lock. We get to keep it and we get to take it on to the next property, which is something that's very new that hasn't been out there. So my suggestion would be, if you're serious about buying a house, we can lock you in before you have a property and we can lock and shop. Now, I can't tell you when to lock. I can give you my opinion of what I think the market's going to do. I don't have a crystal ball. If I did, I wouldn't be here with you on the radio. I'd be on a beach somewhere. But I can advise you. I can tell you what I think the market's going to do, where it should go based on the news that's coming out, and then we can make a decision together.
And are you still seeing contracts come across your desk that have sellers doing a contribution towards buying that interest rate down?
It is the vast majority of them.
Okay.
I think I have, out of the 11 purchases closing this month, I have 2 that didn't have seller contribution.
Okay. You want to speak a little bit about what that seller contribution looks like and what that money is going towards?
But we can use it for a lot of things. We can use it to what we call buy the rate down, which is essentially you're paying money to get a lower interest rate. Some people are using it for temporary buy downs. I'm not a temporary buy down fan. It can go towards your fees, your lender fees, your title fees. It can go towards your prepaid interest, insurance, taxes. I mean, we just closed a transaction where all of the buyer's fees were covered, and I think there was $400 left over and is getting paid to the principal of their balance. And that all came out of seller contribution, and I don't know, I think we contributed $1,500, $1,600 to it also. So you can, with seller contributions, lender contributions, realtor contributions that want to contribute, they can cover all of your closing costs, and all you need is your down payment.
When you talk about buy down, are you talking about taking the interest rate from 5.65 to 4 or 5 or something like that. That's what I understand the buy down to mean.
Give you an example right now on.
I love these real life examples.
on a conventional transaction where they're putting 10% down, you would be looking at a rate of almost 7.25%.
Right.
Now, if you had the seller contribute $5,000, this is me doing the loan. You're not going to find this with anybody else. This is just what we do. If the seller contributes $5,000, that rate would be 6.375 today. So 7/8 of a difference, almost a 1% difference in interest rate. And on a $300,000 loan, that's $3,000 a year or $278 a month.
Mm-hmm.
That's a lot of money.
It's a big difference.
It does make a difference, especially when we're all kind of pushing the limit of our budgets to begin with.
When we look at new products, we talked a little bit about new products. Earlier, you were talking about the new product for 30-year mortgages, but I thought you mentioned there was a possibility of a 40-year mortgages being out there in the future.
There are 40-year mortgages out there today. I keep hunting for one that actually makes sense. We go back to talking about the secondary market for a minute, mortgage-backed securities. It's set up to secure mortgages up to 30 years. It doesn't have an appetite for 40-year mortgages. So the interest rates are, on some of the products, higher, so much higher that it negates the extra 10 years, and your payment ends up being higher. I do believe I found one, and I've been playing with their numbers and trying to find the sweet spot, but I do think I have found one for a 40-year where you actually are going to see some benefit of that longer term financing. I think it's a Band-Aid for a shotgun wound. It's a way to get into a house right now, and then rates come back down. You'd want to get back into a 30-year or a 25 or a 20, but I think it's a good product that will let people be able to get into a home, because we're spreading that over another 10 years and wait for rates to come back around to where you can refinance into a lower rate.
And at what point, what is that magic number as far as refinancing? So if they come down 0.5%, you're probably not going to recommend someone refinance.
It really depends on how quick rates come back.
Mm-hmm.
If we see this a steep decline, I'd say let's sit a little bit and wait. I don't think that's going to be. I think we're going to have another one of these gradual runs like at the tail end of 1981 when we hit the peak in rates. It was just slowly came down over the years. I personally, when I look at doing a refinance for somebody, I don't want to lengthen their term. So if you've been in the home for 3 years, I don't want to put you in a 30-year mortgage. I want to put you in a 27-year. Well, we'll put you in a 27-year, and let's lower your rate at least 0.75% to a full point. You're going to save money, and you're not going to go backwards.
Right.
If you do a 30-year mortgage today, and 3 years later you do a 30-year mortgage, you just threw the last 3 years of payments out the window.
Wow.
And so it's looking at two parts. Can we shorten the term, and can we get close to a full percentage lower in rate?
I actually appreciate that you said that, because one of the things that you do is put the client's interests above your own, and not throwing away those 3 years. That's a big deal. And too often I think people are refinancing, they're extending that length of time, and there's just not as much benefit as what I would want to see if I were in that position.
In that 2-year refi boom we had, or a little longer than that, I think we probably did 500 loans in that time frame.
Yeah.
I'd say less than 5% of them were 30-year. We made sure that we didn't go backwards, and we went with custom term mortgages at shorter terms.
Thanks.
Awesome.
That's great. We got more with Jon after this. So if you're here with Jon Spurr of Inspired Life Mortgage, if you're looking to buy or sell your home, or if you have any questions concerning real estate, please call the Johnson Smith team at 520-904-7711
or 520-850-1725.
We'll get back on the other side.